What is up, YouTube? What's up, guys? The Composer Trader here, and welcome back to another video. And today it's going to be a bit of a different video than usual. Typically, we have the post-trading analysis videos where I showcase you the trades that I took with an explanation. We're still going to do that in other videos, but in this specific video, I want to showcase to you guys all the opportunities that were presented to you if you were to trade XRP alone this week, because it has been absolutely insane. And after this video, anybody that tells you it is impossible to make 5 to 10% each week consistently, well, send them this video and they'll change their mind. Okay, so we're going to be talking about the TCT concepts explained in the TCT mentorship that's on this channel for free for you to watch. So if you haven't already, go and check that out. It's under the playlist section. And let's dive into the price action. So what we initially had here, just to build some context for you guys, is we had this range formation, and we were watching for this range to turn into a PO3 because it was setting up perfectly with the range compressing as well in here, compressing in the price action. And then right here, you got that aggressive breakout, making a lot of people bullish, also coming to a new all-time high, SFPing the all-time high, setting itself up for a perfect potential PO3. The only issue is that the manipulation part of the PO3 did not meet the requirements of having some sort of a distribution model in there. Matter of fact, it actually deviated the low, which is the opposite of what you want if you're looking for a bearish PO3. However, we still got that follow through, and from there, price dumped down very hard, swept all that liquidity, even the liquidity right below that range low, and then had a V-shaped recovery back up. This is very normal. Whenever price comes down, it's a massive liquidation event, and price likes to have some sort of a V-shaped reversal back up as an initial kind of relief rally, rebalancing price. And then what you can expect after it is price to kind of cool down, retrace some more, and create some sort of a mid to high time frame range. Okay. And from there, liquidity is getting gathered, and we prepare ourselves for the next move, whatever that might be in the future. That's not what we're here trying to predict right now. So that's just to give you some context. We had the PO3, we had the aggressive liquidation move towards the downside right here, and we got that V-shape back up. And that happened on Monday. Okay, so right on Monday open during the Asia session, we dumped price back down here, and then we had that V-shape recovery back up. So when the overall expectation is to have some sort of a cool off, you can look after that V-shaped recovery. Okay, where are potential areas of resistance? And we can see right here, we have this structure supply POI. And this is kind of where the significance of XRP this week starts regarding TCT concepts, because we can see following our structure down, we're making lower highs and lower lows. We have that aggressive V-shaped recovery, and then price is coming towards that market structure high with supply right above. So obviously, if you have a tiny close above it, above that market structure high, that's not considered a break of structure. Okay, if you truly want a good break of structure after such an aggressive V shape, especially when you have supply right above it, you need to break and have some good displacement above that supply zone and above that market structure high. And we can see something very significant when coming into our first true area of resistance. And what can we see? Well, if we follow that structure up on the higher time frame, you're making higher lows and higher highs. And this is kind of the structure on like the 5 to 10 minute. And then from here, if we make that a bit thicker, you can see we're trending up, pulling that range from high to low. And we can see we have our first official range creation right here. Deleting that structure, you can see price came into that area of supply, came into that area of resistance. And then from there, we have our initial range high, have our initial range low, and then from there we deviated that high once. Okay, so got that perfect deviation, and looking at how prices have been coming up afterwards, we can see, okay, I'm looking for a potential distribution model because we are in an area where we can expect some sort of a rejection. So when putting in that deviation, we're going to check for our POIs. What's the POI for the Model 2? What's the POI for the Model 1? Obviously for the Model 1, we're going to extend that range high to the deviation high. And then look, where is our extreme liquidity, where is our extreme supply, to validate a third tap from a Model 2 perspective. Okay, now looking at the liquidity, we can see we have a lower high and lower low right here. This is the first lower high that gets created and is therefore your extreme liquidity, and therefore also your target and a requirement for price to sweep if you want to create some sort of a third tap. And on the 2-minute right here, we can see we have an order block right above it. Okay, order block right above it, 2-minute order block. Lovely inefficiency creation when creating the block is beautiful. So the moment when price comes into that block initially, sweeping that liquidity, we can look for a potential model 2 distribution schematic. And we can see coming into that POI, we're creating this beautiful sell side liquidity curve where all these lows are stacking up to be higher lows, just like that. And that can make for a nice and easy move down once we get the confirmation. But going on the 1 minute to kind of see, okay, where is that break of structure going to happen that's going to confirm the entry? And if you don't understand how to confirm entries, again, lecture 5 of the TCT mentorship will go over the TCT models. You can see you're making higher lows and higher highs coming into it following the 6-candle rule. And this was your market structure low. And you can see you SFP'd that low. You wicked that low. So that obviously does not confirm the model. And from there, you go back up again, which is completely normal. So you go back up, you take that high again, and then from there, following that most local structure, we can see we're making higher lows and higher highs coming into it. And we have a very aggressive bearish break of structure. Very easy break of structure. These break of structures are always the best. When you just have that 6-candle rule of 2 candles going up, down, up again, and then in 1 to 2 candles, we're on the 1 minute, immediately prices, in a few candles, break structure very aggressively because that makes for just nice aggressive moves towards the downside and easy entry, high RR opportunities. So the moment you break it, that's where your stop loss goes. This becomes the new third tap right there. And then you confirm your model. And you can see that that return to zone actually got extended coming into that third tap right here. Because you can see all these higher lows of the retracement back up also stacking up to be higher lows compared to the previous one, continuing that return to zone. Now, this makes for an absolutely amazing, very high probability model. And you can enter the trade. Technical target will always be the opposite range extreme point, which is the range low. And you can always leave some run because, as you know, you can expect some sort of a deeper retracement because we just had a massive V-shaped recovery. And I'm just for now showcasing you the technical target. You can expect, price to sweep, maybe some more liquidity towards the left, get a better RR. But I'm just for now sticking to the technical target, which will make for a 5.36 RR. Okay. So you risk 1%, you risk $100, you make $536. So that's already your 5%. If you want to make 5% in a week and compound that over time, which will make you incredibly wealthy, you can just simply wait for models like these. Pro context, great model itself. Take it, be done for the rest of the week. Take the trade, be done. Now, unfortunately, this trade in my time zone was at 3:30 in the morning, so I wasn't aware of this setup and I couldn't take it. But there were some other traders in Discord that did end up taking this, so that's all good. Okay, but that is the first that we put in. Okay, first simple trade. Now, from there, you actually got a low time frame accumulation model here as well, but I'm not going to be talking about this. I want to focus on these distributions because what happened right here is that on the range creation, you can also see that price broke structure. Okay, so we had this right here. We had that push up. We created that range where we took that high, confirming this is your low, and then boom, price break structure. So expectational order flow after breaking structure would obviously be a lower high for a lower low. Okay, now then we're going to look for areas of rejection, and obviously it doesn't really matter. This entire range, okay, this entire distribution range is resistance because that's where structure was broken. So you can call this entire thing your structure supply, and then you can refine it down to like these low time frame structure supply POIs, which price actually ended up tapping into. So we're going to be putting that on the chart for now. Didn't have that proper inefficiency when breaking the low time frame structure right there, but for now we're still going to use it. We're not trading the reaction from it. We're trading the distribution model coming into it. And coming into it, we can still see that we're making higher lows and higher highs. Otherwise, how can price come to that point, right? To go from A to B, you need some sort of upward structure because price needs to move up. And you don't move up in just one vertical line. And you can see right here, when moving up, you're making higher lows and higher highs, and you can pull your range from high to low. You can see you have your initial range high, initial range low. And from there, price deviates that high, tapping into that supply, also deviates the low, and we can extend the range high and the range low to the deviation high and low. Now, you have to ask yourself, which trade makes more sense, a potential accumulation or a distribution? Well, we're coming into an area of resistance where we're expecting a lower high, so a distribution makes more sense. And from here, we sweep that high one more time, going on a lower time frame, looking at, was there a break of structure opportunity? Yes, there was. And you can see right here, coming is that third tap, you're making higher lows and higher highs. And then boom, price ends up breaking structure right here. Okay. Now, this is not a convincing break of structure yet. This would have been the better one. And you can already see the complications on this model itself is that initially you already wicked the low right here. And then from this point going forward, the true return to zone starts, the true liquidity curve. Okay, so it is a bit sketchier to start using that point as your tap. It ended up playing out, but that's obviously talking in hindsight. I just want to showcase you the possibilities, okay? Now, you did have that break of structure here. Let me check the 3-minute real quick. I don't know if it was valid on the 3. Oh, it was actually 3-minute structure. Yeah, but that was also very sketchy. So it was a bit harder to enter. You did end up getting that Model 1, TCT Model 1 redistribution, just like you got the Model 2 distribution there that created the lower high. But the entry on this one was a bit harder. I also did not manage to catch an entry on this position because the moment you broke structure truly convincingly, you're already right here entering at the equilibrium of that range, making the RR not that good. Okay, not that good. But from there, following that structure that we were following earlier, making lower highs and lower lows, price ended up having a distribution model and pushing price lower, taking that low, continuing that downward structure from top to bottom. And from there, what happened again? We're following our structure, prices from the low to the high, making a higher low and a higher high. And you can already see the way that we are coming up right here on this upwards trend, local upwards trend, pull your range from high to low, all explained in the mentorship on my YouTube for free. And you have your initial range high, have your initial range low, and have that deviation 1. Okay, simply have the deviation 1. And you can see right here, price is curving up into that second point beautifully, leaving a nice liquidity trail behind, just like this. And then from there, after creating that third tap, you can check where is your extreme supply. You have this 30-minute order block right here. But in that 30-minute order block, you also had this 50-minute block, which in my opinion is the better POI to use. Okay, it's the better POI to use because it just showcases the true extreme supply right here. Showcase the true extreme supply. And after creating that second tab, zooming in, you can see price coming into that high, sweeping the range high. You're breaking market structure right there, bearish break of structure, and price after breaking structure, slowly has a retest coming into our supply POIs, just misses that extreme supply that I was hoping for, and then ends up breaking structure on the low time frame. Okay, ends up breaking structure right here on the lower time frame, right there. So the fact that you break structure after creating that second tap, leaving behind this beautiful extreme supply POI, where if price comes back for it, you can validate a third tap from a Model 2 distribution the exact same way like we just did right here, literally the exact same way. If you can simply look at your local structure and wait for that break of structure, you can enter. Now, personally, I wanted to see this 50-minute order block getting mitigated. Oh, sorry, getting triggered. I want to see this 50-minute supply zone getting mitigated. And we were also watching at this time, I remember we were watching the Doge trade. We were already in a Doge short position. So I wasn't really looking to allocate a double risk towards the downside on the same crypto environment, because if XRP is not going to play out, Doge is also not going to play out, and already have a risk on Doge, which was the even better looking model. Don't know why my Siri went off right there. But there we got the breakup structure confirming the model, right? And we can see right here. That after that breakup structure, price has that easy rotation down. And this was actually a normal break structure. You could actually trade it, put your stop loss there, target the range low as your technical target. And voila, exact same model, exact same distribution that again continues that downward structure pool, making lower highs and lower lows. Now, at this point in time, we actually mitigated our first demand POI. Okay, right here, you can see beautiful 30-minute demand zone that got left behind on that push back up during that V-shaped recovery. And boom. Price bounced from that and is slowly moving back up again. 1 second, guys. 1 second. Okay, a little delay in the video. Don't know if I can cut that out, but from there, we mitigated demand and price slowly started retracing back up again. Now, mind you, at this point in time, we're kind of in a neutral state because we had that V-shaped recovery, but we're also already getting the current retrace. So following structure from the top down, we're making lower highs and lower lows. That has never been broken back to bullish. And then following structure from the low up, we're making higher lows and higher highs on a higher time frame, on like the 45-minute to 1 hour. And that is trending up and also hasn't been broken back to bearish. So literally in this exact point, you kind of have your downward structure here that's following the primary downward structure from the top to bottom of that massive move down, contradicting the rep market structure. So you're kind of like a decisional point in the chart at that point in the time. But I was expecting overall some sort of a range creation, because we had an aggressive move down, aggressive move up, and now we're slowly getting that structure move down. And at this point, I'm already identifying that, man, we had the same model back to back to back. Right here, we had the same model back to back to back. We had a lower high, right? This is that tipping point, distribution, push down, push back up into supply, distribution, push down, push back up into supply, distribution, push down. And now it was the first time we actually mitigated demand. So initially speaking, I wasn't really expecting another distribution model. But looking at what price is currently doing here, we're simply trending up locally from that push up of demand. And what we can see here is that local upwards trend where we can pull our range from high to low, initial range high, initial range low. Again, coming into that second tap right there, we can see this beautiful liquidity curve getting built up, extend that range high to the deviation high. And then right here, you have the most perfect sweep. Boom. Most perfect sweep of that range high again, indicating a model 1 distribution. And on that retest of that POI right there, again, continuing with that return to zone. And then zooming in to confirm your entry. Again, this was a bit of a harder entry because you pumped coming into that third tap, sweeping that liquidity on the left right here. So you can't really use any proper structure all the way until down here. So at that point in time, if you compare the break of structure entries between this move down and like the move down from all the way at the highs here, you can see at the highs right here, you just had 2 candles on the 1 minute time frame that broke structure very aggressively, right? 2 candles. Whereas right here, since it's further down, price has to travel more distance, breaking that structure. And therefore, you can also expect some relief rally up after having broken market structure. So you can still enter right here, put the stop above the high. And if you come into any significant areas of resistance on the retest right here, you can enter on the reconfirmation if you follow this local structure that maybe turns back to bearish. But we never got proper structure in here, so could have also never refined the entry. So that would have been your breaker structure, confirming that price is going to have a rotation down again to your technical target. And then you would have a beautiful 2.3 RR setup. Okay, beautiful 2.3 RR model with, again, the exact same schematic as we have been having the entire move down right here. Lower highs and lower lows. Let me put these all in the chart. This was way harder. I'm not going to put that in the chart. That was way harder. Right here. Boom. Okay. Now, from there, we did mitigate that demand, but I also knew that in this demand zone, we have even more refined demand on the 50-minute, where the 50-minute order block right here is truly located right in that pivot point, where you can see we went down right here, deviated this low, had a sell to buy right 15 minutes before New York, and then right on New York, you pump back open. So if you want to talk about algorithms controlling the chart, pumping price at certain times, this is a perfect example of exactly that, because literally order block right in that pivot point created with the push up exactly on New York open. So this was the most refined demand. And that most refined demand got mitigated, and price decided to have some sort of low time frame accumulation that wasn't really a high probability model. Okay, it wasn't really a high probability model because there was a lack of proper time displacement, return to zones, all that stuff. Okay, if you're in the VIP Discord, you know all the factors that come into identifying proper high probability models. Now, mind you, at this point in time, I am expecting price to have some sort of a reversal and a relief rally back up, because you have now been continuing your downward structure for 1 break of structure, 2 break of structure, 3 break of structure, 4 break of structure. I'm like, whenever you are in between like the 3 to 5 breaks in one direction, you can expect price to manipulate in some sort to grab and gather more liquidity before reversing in the other direction or continuing the trend overall. But after a while, if the trend looks the exact same, people start to notice the trend and they all start to try and short the lower high for the lower low. That's why the market makers then push price higher to grab all that liquidity before either continuing the trend or just fully reversing it. But if you have a full reversal, you'll have some sort of an accumulation model prior. And what we see right here, I'm like, there's no way they're going to do the exact same shit again, right? Like, there's no way. We're talking like just in the span of like 3 days. But what we can see here is that initial range low that got swept. We have the range high here, but then on the move up, right here on the move up, we can see we are again creating this beautiful return to zone. And we deviate that range high right here. So we're going to extend the range high to the deviation high. And then from there, price comes back up, sweeps literally the most extreme liquidity point on the chart. Again, all explained in a TCT mentorship. And then you break structure back to bearish again. It's like, it's absolutely incredible. How can you see this and still not trade these models? It's absolutely insane. Can draw this right into that pivot point. Again, it's absolutely insane, guys. Oh, just got some notifications that prices are pumping. Nice, nice, nice. But right here, again, on that break of structure, exact same entry, exact same model, exact same execution, exact same target. It's all the exact same, guys. I've showcased you the models, and it's happening over and over and over again. Now, at this point, I'll be very sketchy with trading this last model because I'm like, there's no way structure is going to continue itself 6 times in a row. You need some sort of reversal. You need some sort of relief pressure in the opposite direction. So then what can we do? Well, we can watch for an accumulation, because if you have a confirmed distribution, but you're expecting price to go higher, you can watch for an accumulation. The same way we had an accumulation, a potential accumulation, and a potential distribution in this range, we were looking for a distribution because that made more sense because we were expecting a lower high. But because of the exhaustion in the trend coming into this POI, I'm expecting now an accumulation. But we do have a valid distribution, so we can know Lecture 5B, or I think Lecture 6, going over the advanced TCT schematics, you can check if that accumulation or that distribution can go over into a accumulation, okay? Now, what can we see right here? We have a 1, we have a 2, we have a 3. This is a bit of an aggressive push down, so I wouldn't trade it as a model 1. But then price comes back, mitigates this kind of like wick demand, which is your extreme demand, because it's the only demand there is in the range that you can look at. You can also use this 1 minute pivot point order block. It's all fine. Okay, right here, 1 minute pivot point order block. Price comes back for it after perfectly testing supply. So now this supply is not there anymore. And this was kind of the only supply there was that could truly hold price back. Because right here, there's nothing but a liquidity trail. Okay, nothing but a proper liquidity trail. Price comes back, mitigates extreme demand, breaks structure back to bullish right here. And on the retest, after breaking structure back to bullish, you create also this local liquidity trail above, showcasing that there are reasons for price to go back above. Get the low time frame break of structure here. And the reason why you can be so confident is because at this time, on this 30-second break of structure, all the liquidity is pointing up and no liquidity is pointing below, because you mitigate extreme demand and all the buy side liquidity is higher, right? So we're already expecting higher. Okay, we're expecting higher because of the exhaustion towards the downside. We get the accumulation, we get the extended accumulation, and voila, you can run it back up 10 RR, and you can leave a runner for this 100%. It's currently up at 20 RR. Like, we're speaking live. I'm recording this literally live. It's today, the 7th of Feb. So I'm just showcasing you this, and I'm like, this is all in the span of less than 4 days. Only this trade could have netted you 5%, which would be your weekly profit goal. Only that trade. If you can compound 5% each week, you're done. You never have to work a day in your life again. I'm showcasing you 5%, 6%, 2%, 6%, and currently 20. Guys, what is this? 5 plus 6 is 11, plus 2 is 13, plus 6 is 19, plus 20, 19 plus 20, 40 RR? Using the same model, the same entry confirmations, the same targets, the same requirements. Like, are you seeing this? Are you seeing this? I don't think people are actually understanding this. It's absolutely insane. And TCT is one of the most effective ways of trading, and you can't prove me otherwise. Show me something else that can deliver 40 RR in a valid way. We're not counting this, okay? We're not counting that because that wasn't a proper entry. So I'm not cheating here. But tell me something that can deliver you 40 RR in a valid way with concepts given to you in this setup. It's absolutely beautiful, guys. Lost for words. This week has been a blessing. And I don't know what to say. I'm going to leave it here. Go and study the mentorship. And I'll see you all on the Discord. Peace out.